let's get started then. So Jay and Patrick, who are on that side. So anybody who is on via Zoom, if you guys have questions, if you want to just put them in the chat box, I can see the chat box. And Rania, if you can keep letting people in for like the next 5 minutes, that would be awesome. Otherwise, I'll be paying attention. So question wise, you already said who you are, but when did you start investing in real estate, Patrick?
I started, it's been just about 3 years. Before that, I spent 6 years in the Army and then got out of the Army, moved out to Charlotte after I got out and was in consulting. So when I started doing real estate, I was working full-time for PricewaterhouseCoopers traveling. So I was Monday through Thursday building starting my business from a hotel room and airport lounge. So that was the start. Bought my first rental property in September of 2019 and then bought another one 7 days later and then continued to buy properties. So
that's cool. I have questions around all of that.
Yeah, right.
And so same question, Jack. When did you get started?
I seriously think 2015 was my first. I had a little condo up in what's that area?
Like around.
Yeah, Derivate, right? That I was listing agent on it. It had been referred to me by another client. The seller was a teacher in the Philippines. And so everything was crazy difficult. Like she had to go to the US Embassy to get things notarized, which was like a half-day trip for her, so to speak. So the first closing fell through at closing. And she was like, what are we gonna do? And I was like, started running some numbers. I was like, I tell you what, how about I buy it? I'll pay you full price. You know, instead of paying me commission, I'm going to use that money to renovate with. And so we ended up putting new flooring, new painting, new light fixtures, I think stuff like that. And it turned out to be a really good little investment. And I sold it 5 years later, doubled my money on it.
Wow.
1031 that into something else and just kind of. I had been buying, but 5 years later, that one turned into, another one.
Awesome.
So. Yeah.
Cool. We have somebody added. So Danielle and Melissa, welcome. And if you guys want to take yourselves off mute, if there's questions, Danielle, I don't know if you were here when we did the introductions, but we would love to know who you are and what you're up to. But we're going to keep going. So if I notice that you're off mute, we'll engage. So what does your current portfolio look like? I'm going to start with you, Jay.
So I've got 5 single families.
Okay.
Yeah. And I think I've sold 3, right? So like, started with the condo, bought a couple others. The funny thing is most of mine started out as listings or listing appointments.
Right.
Right. So like the strategy around acquiring or acquisition, only one of them I had like headhunter was actually prospecting for going to find something.
Mm-hmm.
The others kind of showed up as, Gary said from stage, Gary Keller.
Yeah.
We should be analyzing every listing appointment we go into to see if we want to buy it or at what price we would want to buy it at.
Yeah.
And whether or not it made sense. And then snowballs from there. Most of the time, 3 of them were listings that I walked into and said, okay, this is what it's worth. This is what it could be worth. I don't think you can get from here to here.
Right.
So if you want, I'll make you a cash offer.
Yeah.
And those were like, one of the ladies just asked, she's like, would you buy my house? And I was like, well, yeah, I guess. Like, I mean, it didn't occur to me at the time.
Right.
So, that was happening. And then the last one, not the last one, we bought one 2 years ago in downtown Charleston.
Yeah.
For my daughter to live in college.
Smart.
And then she transferred. So we just sold that one and, trying to figure out how to reinvest. But anyway,
Or did you put it into 1031 or yeah?
No, South Carolina does something funny with taxes.
Right.
Right, for those of you guys that are not in South Carolina, so we had to put it partially in her name.
Mhm.
And so when we went to pull it out, when we went to sell it, we talked about 1031 and looked at a couple of different options. It was gonna be complicated.
Yeah.
So do people, oh,
Yeah.
sorry,
No, go.
do people ever get offended by an offer? So for example, if you go in, you're like, you go from X to Y, that's really the range. I'll put your offer in at X. Do people ever just feel offended by the offer that you give them?
So as a real estate agent, as long as I'm saying, look, this is what the house is worth, and this is what it could be worth, and this is what they get from here to here, as long as I'm being upfront and honest about that, then there's really no conflict, right?
Yep.
And again, this is easy button. If
Yeah,
this
yeah.
is what you're interested in.
Right.
So this is all about them, and yet I have a lot of experience in the buy and hold, and so literally I got into real estate because I was an investor. And when Gary said that was like 2017. It was not long ago.
No, it's about, you're about right. It's about 5 years.
Yeah. And I was like, I already do that. And in my mind, that was a gift,
Mhm.
right? To
Yep.
have the real estate license and have the opportunity to make offers if I wanted it to build my portfolio. And with the exception of my beach house, every single one of those homes that I have, we have 9 currently, are because I had either to bridge the loan for my client to buy the future house, or one of my teammates needed to sell her house in order to buy her next house. So it made sense.
Yeah.
We're just able to jerry rig a little bit.
I mean, we were the bridge loan when the bridge loan wasn't there.
Right.
Right.
And now there are those options.
Or the renovation.
Right.
Because they couldn't do it themselves or
Right.
whatever.
Welcome, Ashley. If you guys have any questions, I see some questions. Yeah, Ranya's gotcha. So if you have any questions, just speak up, take yourself off mute. So what does your portfolio look like?
So for me, well, first of all, I love what both of you guys said. If you can own, especially in this kind of market where over the past couple of years, if you can own the top of the funnel, you're the one that can control the deal and have the deal flow, like do anything. So that's awesome. For me, I started in small multifamily. I started with my first deal that I bought was a quad. It was in Gastonia. Complete disaster, nightmare property, evicted.
We managed a lot there.
It was the idea of blood, sweat, and tears. I put all 3 into that house, but it ended up being a great investment. Also doubled in value. That one in about 2 years. Obviously, a lot of it thanks to this market. But had that one, and then bought the 6-unit place up in Statesville immediately afterwards. Got under contract both at the same time. Whole story around the closing on the first one was just a nightmare. Good learning lesson for we had 3 appraisers and 4 closing dates, and the appraiser just disappeared. To this day, no one knows about it. But anyway, so I bought 5 different deals, 20 units over the first 9 months or so, and then since then I just sold one of them. Closed on Monday, and so now I've only got 1 left on. I got the one up in Statesville. So since then I've got a total of 2 single families here in Charlotte that are short-term rentals. I've got a duplex at university that's a short-term rental. I've got the 6 units up in Statesville, and then I've got an 18-unit place in Warrington, North Carolina. So if you don't know where that is, no one does. It's north of Raleigh.
Well, so I'm curious, and can you guys hear everything that we're saying? If so, just say yes. Awesome. I'm curious. So you were traveling a lot. You were working probably a cushy job that, everyone wants to work for they're part of the big 5, right?
Yeah.
Okay. So what made you buy the fourplex?
It was I had always, since I was a little kid, wanted to own a business and want to be an entrepreneur. I always looked at it from the business sense of, my mom was a very successful Mary Kay director,
Okay.
And so I grew up seeing her. I grew up learning how to drive in a big Cadillac.
Awesome. Too bad Lori's not here. Lori has a big Cadillac.
Yeah, she does.
Yep.
Yeah.
So that was like, I started a business when I was a little kid, burning her Mary Kay CDs that is probably not called pirating, but it's fine. I was 10, so it doesn't really count. But I always knew I wanted to do something. So the Army's not exactly a great place for that. UWC is not a great place for that. So that's where real estate made sense. I also knew, for me personally, I was never going to be the person that creates a new product or service out of thin air. So
Okay.
real estate is a very good way that you can get into something that's known, it's established. And it just made the most sense. So I started looking. Really, it started with about a year before that. I was getting ready to turn 30, and I was just kind of evaluating, assessing, and realized, I had a good Army career, successful Army career, successful consulting career at that point. I was only 6 months old, but I started doing the whole self-evaluation of where did I think I was going to be when I was 30, and I wanted to start doing more. So I dove into a lot of my own personal, getting my habits right, getting that kind of stuff right, and that's what led to having the disciplines while we were on, while I was on those projects, traveling, to start doing the research, digging into the areas that I wanted to get into, and just starting to dive in.
So I'm gonna dig more because I love, so 29 years old, or did you turn 30 yet?
No, I just turned 30.
Okay, so in that, I also started thinking about real estate differently when I turned 30. How did you finance that deal?
I used a 75% down mortgage.
Awesome.
And I sold for my first 5 deals. I sold I won all in it. So I sold it. I sold all my stocks. I didn't have a 401k because I wanted to hold on to everything because I wanted to invest it myself and didn't know there were any other ways to do it at the time. But I sold all that and invested into those deals. So,
Awesome.
And that's why the next 4 that I did, all of them were partners so that I could bring other people in that had money because I ran out of money pretty quickly.
Yeah. I bet, because when you get to the quads, when you get to the bigger projects, you have to start thinking a little bit differently.
Yeah.
Right.
Yeah. And that budget went, because I was new and dumb and didn't know what I was doing, that budget went way over. So
Yeah.
Comes to different places, right?
Yeah.
Well, and single family, and if anybody wants to add to it, if anybody has any experience on the buy and hold side, like when you start buying quads and multiplex and apartment buildings, like you're talking about multiple toilets breaking, multiple kitchens needing renovation, versus the single family home that most of us love and know, where it's like, I have to budget $50,000 for an upfit. You need $50,000 sometimes on all of those properties. So it's just a little different thinking, right?
Mm-hmm.
I love that. Anything to add?
No, I mean, that's why I haven't gotten into multifamily as much. It's just, our world is single family condo townhome. So
Mhm.
it's what we know. It's easier to get financing. From a budget standpoint, it's easier. So that's just the world we play in.
Right.
To this point.
So talk a little bit. I don't know that I had prepared this question for you guys, but when thinking about your buy and hold portfolio that you just described, did you have a buyer box? Did you think before execution?
No, and then yes.
Right.
Right. So my first 3 were accidental investments.
Mm-hmm.
Right, where something happened or I went to a listing appointment and it just kind of fell together.
Mm-hmm.
After that, I specifically started looking at, here's the area based on numbers that I want to look at. And not the last one I bought, but the next last one I bought, I had a college kid that came to us, and he'd been working for a property management company, running around doing like fixing toilets and
Mhm.
stuff like that, right? Cutting lawns, like all the stuff. And he's like, hey, I really want to get into real estate, really want to get into investments, really want to get into wholesale. Okay. So here's what this looks like.
Right.
Here's how Mojo works. Here's how you find the area. Like, here's a list of zip codes that I want to look at
Right?
based on what I think numbers wise. And he, within a month or so, had about 10 appointments for me.
What year was that you implemented that?
2.5 years ago.
So like right before COVID, right?
Yeah.
Yeah. Okay. Yep.
And so anyway, one of them we met at that Starbucks right there. It's funny because so he's like, hey, I got this one. And he wanted to go on the appointments with me. I was like, cool, that's fine. So we're everywhere from Gastonia, Mount Holly. We stayed out of South Carolina because again, the tax thing just
Right.
when you can buy both states, it doesn't make sense to buy South Carolina
Agreed.
as often.
Yeah.
So, Concord, Kannapolis, we started getting up into Statesville a little bit, looking just those areas where you could still buy kind of under the radar properties a few years ago and get like decent rents. And we were able to pull one for 120. Yeah, bought one for 120 in downtown Kannapolis, right on the circle.
So what? It's now worth at least 270.
Yeah.
Yeah. Wow.
And I think we got the deal because they needed to buy. They were wanting to buy something. I said, look, you can stay in it for 4 months free. I don't care.
Mhm.
And after that 4 months, this is what the rent's going to be. Or 3 months, this is what the rent's going to be. And they actually rented it from us for a year after, at really kind of top end market rent.
Right.
So immediately it was cash flowing, which
That's
was
awesome.
awesome.
Yeah.
That was about
And-
doing any work to it.
Yeah, no work.
It's amazing.
We're just now like they're moving out. We're getting ready to renovate.
Wow, that's awesome.
Wow.
So it's been good.
How about same question?
Mine initially, back to the first couple, I started kind of going by necessity of narrowing. The only reason I ended up in multifamily is because I pulled up something like Realtors or whatever in Charlotte, and there were way too many dots, and so I started trying to filter how I could get fewer dots, and multifamily was a quick way to do it.
Yeah.
So
I don't want to see all the rest of this.
yeah, like that's way too much. I don't know. But then when I started looking at it more, and I had, I'd done a little bit of research and knew enough about multifamily to know the idea of, not necessarily the downside of what you guys are talking about with the multiple expenses under one roof, but multiple sources of income under one roof. I like the idea of it. And so I found some properties that other people didn't want for various reasons.
Mhm.
Once I got into the first one in Gastonia, I realized why they didn't want it, because it was an old, really old property that had a lot of problems and stuff like that. It ended up being a very good investment. But the second one that I got was kind of it's up in Statesville. It was 6 units. It was 3 duplexes that were all in one parcel.
Oh.
And they were all side by side. They all could have been subdivided. So that's what I did when I bought it. But it was I found that weird space where anybody that typically buys commercial properties aren't buying that because it's $155,000. It
Wasn't worth their time.
wasn't worth it at all for me. And then for most residential buyers that are looking at multifamily or people that are trying to get into real estate, they are scared of a commercial loan and they're scared of trying to figure that out. And also it was more difficult because a lot of lenders, it's hard to find a commercial lender in some cases that wants to do a loan that small.
Right.
So I ended up finding someone that could do it. We got it for, I think it was listed at 180. We got it for 155. And I subdivided the property, and within
How many doors were they?
6,
That's
Yeah,
strong.
great.
Yeah.
Yeah.
What year was that?
2019.
Like crap.
Wow.
Yeah.
Yeah.
And it had been sitting on the market for almost, I think, 3 months.
Commercial
Wow.
loans are the best too.
Yeah.
Like they're so easy when you figure out all the balance of it.
Yeah. And my whole thought going into it was the best bet was going to be I subdivide them. I can then refinance each one of them individually and basically do the whole first strategy on them
Right.
and get my money back. And then when I went to go do that, I started realizing that each one individually gets real expensive with closing costs and with an appraisal for each one, all that stuff. So I ended up doing a commercial loan on it too, but I could do a commercial loan that did a line of credit on top of it. So
Just do a package.
yeah.
Yeah.
So they ended up appraising all 3 of them. Each one of them ended up, we just by subdividing added $100,000 in value. Because now the logic for the market was each individual property is now can sell that on its own. So now it's open to more buyers, it's open to more demand. I actually just got the appraisal back today. We're doing a reassessment for line of credit, and they initially appraised for 85, and now they've appraised for 135, and I haven't touched them in the last.
That'd be an interesting one. I don't know what you have in them now, but that would be an interesting one to look at seller financing.
Yeah,
Yeah.
so, I mean, that's immediately what I was thinking. Like, or not, gosh, you could create like 4 or 5 notes on that.
Yeah. Yeah, there's
That's
so
a
many
different
options.
topic.
Yeah.
You don't want to get so far down that hole. Where
Yeah.
it's not buying.
Yeah.
There's a lot.
When you're talking about $30,000 a door.
Oh my gosh.
Yeah.
And
So I don't think
so,
that actually answered the question. But
well, no, but that was cool, right? Like you just described a little bit about your thought process.
So do you have okay, so you're not a real estate agent.
right.
So how are you sourcing deals that are on MLS, or are you sourcing deals?
Both. So those two came from the MLS, and they were just kind of overlooked, or they didn't fit someone's profile. And then I think 4 out of my first 5 deals were 3 out of 5 were MLS, and then the other 2 were off market. And then a lot of the stuff that I've done now has been a mix, primarily off market. A couple of deals that we got from my own marketing, but when on the flips.
Yeah.
And then a couple of deals now or one deal in particular from a commercial broker, the 18 unit. So
Are you using sources like PropStream or any of those kind of resources?
I had been. I transitioned, and this is a whole different story. We can do it if you want, but I went from rentals to I accumulated those doors, and there wasn't, to briefly answer your question, there was no real strategy except for it needed to make sense financially. So
Yeah.
I had, out of the first 5 properties that I bought, one was in Gastonia, one was in Statesville, one was in Salisbury. They were all multifamily. And then one was in Fayetteville and one was in Hope Mills. So they were everywhere, which ended up being a nightmare.
You know, it's interesting because I'll tell you, like, how many times you get an investor as a real estate agent that says, I'm an investor, and then they never buy
Every day,
it, right?
Yeah.
every
But
day.
if you're an investor and you pull a trigger on
Mhm.
something like that, now all of a sudden you're going to know about everything that comes across.
Right.
Yes.
Right.
I have one client, I love your story, and I'm so grateful you're here talking about this because you're a great example of it outside of real estate, but now you're in the real estate industry. I have one client who I met at an open house in 2016, and he's like, I'm an investor, but I want to buy a primary and rent all 6 other rooms out to other people. And I'm like, okay, let's go do this. So we bought the biggest house in the best neighborhood that allowed rentals. And it was his primary for 2 years. Then he went to Buffalo, and he every year since 2016 has bought or sold at least 3 properties with me.
That's amazing.
And I'm like, you are an investor. Thank you. And and a couple of people on here, like, we've met because they were investors and we're just coaching them through some of those opportunities. But like, we get those calls all the time, like, hey, I'm an investor, and if you find the best deal, I'll buy it. I'm like, I'm gonna buy it if I find the best deal.
Well, that's
That's
why I
right.
asked that question, right? Because honestly, like, and just being honest about it, the only time you're going to find that deal is if it's a new agent that's listing it, that doesn't know any better,
Yeah.
or they don't have any money.
Yeah.
Otherwise, it's not getting past one of us.
Right.
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 That's why I was curious about.
Yeah.
Because like at some point you're going to have to start sourcing your own stuff.
Yeah, and that's so I did, and that was kind of the transition when I started flipping. I just did start sourcing some of my own, and then I recently stopped and gone back to using wholesalers and using other off-market opportunities as well.
Yeah.
But to your point, it's been over the course of the first year or 2, building a track record so that I can connect with people that are going to send me a deal.
Mhm.
I had a lender that called me on the way up here that had a new deal, or it's stuff that pops up.
Well, and I think, we kind of have a little bit of reputation in our market center. There's a couple agents that do, I'm sure you do, and I know
Yeah.
there's probably others in your market center.
Yeah.
If you got a deal falling apart, bring it to me.
Yeah.
Let me look
Yeah.
at it.
That's how we bought our most recent 1031 was an agent was like, hey, this is falling apart. And then another agent was like, I need a rental. Can I just scoot my person in there? Like, yeah, I love it when people call me.
Yeah.
It's kind of like, what's that show, Flip or Flop, where Tarek and Christina, yeah.
When Christina went to buy her first rental property, the bank was like, yeah, we're not doing a loan. So she's from Rockingham. So she bought a house in Rockingham, right? Which is a pretty interesting market
Yeah,
because of
yeah.
the rent to price ratios. And the lenders, everybody she talked to, there was like mortgage people were like, we're not doing a deal. I was like, hi, like let's do a deal together.
Yeah,
It ended up getting it through family, but like through that process, like it's funny how many people walk up to us going, hey, I got a deal crash. Cool, let me see some numbers. Just
Mhm.
look at it.
Yeah.
Does it make sense?
love that.
Like we had a deal this week that we had a client that was selling their house, had to sell to be able to buy the new one. Everything was falling apart. And I was like, how fast can I get this thing closed if we needed to? Because I think the numbers would work.
Yeah,
And so we started running numbers, and literally, if it wasn't going to close, I was this close to putting it in an offer.
so when you do that, and Patrick, I'd love you to answer this too. So when you do that, are you looking at percentage? Are you looking at cap rate? Are you looking at, what are you looking at? Like, why did that deal make sense?
Which one?
The one that you were just describing, that it got to the closing table.
Yeah, so I think it makes sense for a couple of reasons. One is we're taking care of a client, that gets out and generates more business,
Correct.
right?
Yeah.
Number two is the agents on your team go, wow, when I've got that kind of power behind me, like they get more aggressive in finding stuff,
Right.
finding deals like that.
Yeah.
And then two, the next piece of it is, okay, so it still has to make sense as an investment.
Correct.
Right? So I don't love the cap rate things. I'm looking at how many years is it going to take to make my initial investment back?
Right.
Right. And so obviously with the cost of money going up, that's starting to get longer, but it still can make sense. Rebecca and I are in a mastermind group together, and one of the conversations we had around real estate is like, go back to the house you were born in, go back to the house your parents have owned over your lifespan. Go back to houses that you have owned as an adult, and have any of them looked at, like, do you ever go look at those and go, well, I'm sure glad I don't own that one anymore? Or do you look at them and go, I'm sick that I don't own that one?
Yeah.
Right.
Right. So for me, as long as it cash flows and as long as it makes sense, like understanding time fixes everything.
Right.
In real estate.
Mhm.
And as long as I'm buying in a great area, as long as I'm buying a house, like I'm not trying to buy a problem.
Right.
But as long as, like, what's the age of the roof? What's the age of the HVAC? What are my big expenses? As long as it cash flows, I'm looking at it.
Great.
So would you buy something that has a negative cash flow with a potential future, making more on the sale thing?
It depends on more than, so yes, I would
Okay.
look at it, right? And we've got some clients that absolutely buy that way.
Okay.
Um,
I buy that way.
Yeah,
And
understanding,
I regret selling my place because it was a negative
Understanding
cash flow
market,
of
you know,
$200,000.
understanding market rent is always lagging price, almost, right? So it's always going to catch up over
Yeah.
time. It depends on how negative it is and whether or not you can, like, what your risk tolerance is. But yeah.
The buildings that, well, yeah, the holds that you have, were any of them negative cash flowing or?
No.
Right.
And that was the biggest thing for me, is having the two things that I look for were cash flow, and they were all value add. I needed to have something that, for me, I needed to, because I was operating with limited capital and I was working with partners, I needed to figure out how can I increase this, how can I add value to it, and then how can I make sure that my money is going as far as it possibly can. And I've changed, I've kind of changed my approach in different ways to where I hold something until it makes sense to sell it. And in that case, I get a lot more aggressive right now with, I'm happy to sell something. I'm happy to buy something if I can improve value on it and then run it out for a while, get some good cash flow. But if the market appreciates and it makes sense, then I'll sell it and I'll just balloon that into something else.
Yes.
And so there's probably some of those properties that I'll look back and say, like, and I really wish I didn't sell that in 2022, but also at the same time, what I could do with the money from that now to snowball that has been huge and has really been helpful
Sure.
too. So I think for me, it depends on the capital position that you're into and and then I also start looking at, once I got into Airbnb a little bit, looking at what's the best way to approach this asset. Like, this one might not, it might be close on cash flow. I'm not really that interested in doing it as a long-term rental, but I can throw, if we want it to be easier, I can make it a furnished finder. I can, do a midterm lease to travel nurses and I just throw furniture in there. Or if I want to be more hands-on, I can increase it even more. I can do a short-term rental. I've got the duplex that I have near university right now has both, one on each side. And so the travel nurse that we have there covers the mortgage and the Airbnb is just profit. So I think that's like when you have multiple, always use the tools in your tool belt thing, but when you have different tools in your tool belt, you can evaluate what the property can do. And so you can come to the table and say, like, this one, okay, I know that this is a good market, this is a good neighborhood. I actually don't need to be cash flow negative if I get a little creative with it and I take a different approach, do a different strategy, something like that.
How did you learn that?
I just kind of figured a lot of it. I figured out a lot of stuff on my own, which is a huge strength and also in terms of weaknesses sometimes. But
like, is it Bigger Pockets podcast? Is it like masterminds?
both,
Okay.
a little bit of both. I haven't listened to the podcast in a while. I did a lot when I started out. And then now I'm in more masterminds, and a lot of it is trial and error.
I feel like Bigger Pockets is a really good way to get an introduction to the language and philosophies.
Yes.
Yep.
And you have to be careful with it because I wish I had a nickel for every wannabe pseudo investor that calls up and says, "Hey, I want to invest in Charlotte."
Right.
They're from California or wherever, it doesn't matter.
Yeah.
Want to invest in Charlotte? I'm looking for a 1-to-1. You're like, awesome, call someone else.
Right. Right.
Because it just doesn't exist
Right.
in Charlotte, right?
Mhm.
There are places you can find it.
Yeah.
Let me hook you up with an agent in some of those cities.
Yes.
And if it does, you're not gonna.
And by the way, if I find it, you're not getting it.
Right.
Yeah.
If
Yeah.
I'm not buying it, I'm gonna give it to the guy that I know is gonna buy everything.
Yeah, 2009, I spent a lot of time on Bigger Pockets, and that's like the Burr strategy and when they
Yeah.
started to roll that out. But then just even like in this conversation, or I had a contractor that he was like, yeah, that renovation only cost me $10,000. I'm like, how did that happen? And just starting to have those conversations, just
It's the people you hang out with too. I mean,
Yeah.
Rebecca and I know each other from a mastermind group that we're in, and we pay
a lot of money.
A lot of
Wait,
money.
like,
and fly across the
Yeah.
country 4 times a year,
Yeah.
sit down with people who are doing stuff at a pretty high level.
Yeah.
And going, okay. And now, like, we're starting a closed fund group
We are.
to look for projects together, right?
Yeah.
So, like, I think the people you spend time hanging out with do matter. Like, you can figure it all out by yourself, but then that doesn't put you in a group of people.
Right.
And obviously, you found some people, so I'm not,
Yeah.
knocking it because what you do works, but you're an anomaly.
Right.
Right. There's a lot of people who say they want to be investors, but they don't put themselves in the right situations to be around people who are investing.
Right.
And they look up 3 years from now, and, gosh, I wish I could. It's just too hard.
So Teresa Clayton introduced us, right?
Yeah.
Just online. Like, this is the first time we're meeting. But like, she's a great example. She knows we help a lot of investors. We do a lot of referral business, she and I.
Okay.
And she's like, you have to meet this person because it's the same mentality. Like, we like to hang out with people that are the same mentality. You are now part of our Your Key to Building Wealth group. Like, that's a closed group where if I have a mastermind and I'm throwing, hey, we're doing a syndication. Do you know what a syndication looks like? And like, that's the group that hears it. You're in there too. And so.
Well, and you've been able to bring it back to your people. I've been able to bring it back to Christina and my brother and some of the people that are, work with us.
Right.
And that's fun too, because then you get to see them have opportunities to grow into and even do deals together.
Yes. Yeah.
Can I ask what the mastermind is you guys are in?
Yeah, Metrics is the name of it.
Metrics.
Mhm.
I'm gonna actually, because we keep talking about it. I'm like, you kind of probably want to be in that room. And there's another one with another capital group that I'm gonna send to you. Anyways.
Okay.
And it's a nationwide thing.
Actually might be Brett's group.
Brett, I'm going to Brett's next week. So, but anyways.
That's been, I will just piggyback on that. So I started in September 2019. Last year I think it was October, November, December, somewhere in there. That was when so much of it was self-taught or learning from smaller groups of people. And it was in December that I started really diving into other groups. So joining some mastermind groups, I've been to a couple of different events this year that were just incredibly transformational because you're having really high frequency conversations with people that are, I'm right now looking at buying a landscaping business that
Yes.
I'm looking at one too.
Are you?
Literally, like this morning, someone presented it to me.
I'm going to see
Makes sense.
equipment on Saturday.
That's awesome.
It's weird. It's great.
But it's in
but-
alignment with your business.
Yeah, it fits. And it never would have happened if it weren't for a conversation that I had at one of those events. It was in Austin, Texas, a couple weeks ago. And
But see, that's the thing, right? Like, real quickly, and I'm not saying there's no groups in Charlotte. That's not what I'm saying.
Right.
But like, at some point, you start growing out of the local environment.
Yeah.
You have to go get on an airplane and go somewhere.
That's
Yeah.
right.
And I'm not talking about go somewhere where someone's selling something,
Right.
right? I'm talking about going somewhere and going, okay, there's 30 people in this room. What's everybody's portfolio look like?
Right.
And is this the right room for me to be in?
Absolutely.
Yeah. All right. So back to buy and hold. And Patrick, you just had mentioned this. Like, what are you doing marketing wise to acquire the properties?
So I wasted a bunch of money earlier this year. Right now, nothing. I'm primarily just networking with commercial brokers, anybody in the commercial space.
Great.
I still have, from the last couple of years, I've got a lot of wholesalers, real estate agents, a little bit of everything for the residential side. And I'm kind of shying away from that now and sticking more towards the commercial and 10 to 30 unit multifamily deals.
Awesome.
So that's the primary source right now. I did do a lot of prop stream. I had a big marketing system I had at one point 5 different DAs and a couple acquisition managers. And then decided that wasn't the right fit. And I wasn't really enjoying what I was doing anymore. So it
Yeah.
doesn't really do you any good. To
I feel
start
like you have to be
business.
careful with that too, because there's so many shops that are set up all over the country that are calling into Charlotte now.
Yeah.
I just got 2 text messages and I'm like, I do that. Like,
Yeah.
I'm a wholesaler. What are you doing?
Yeah, stop. No.
I know what you're doing.
Yeah, right, thank you. The best you say, add me to your, I've had a couple, add me to your list and then hang up.
Yeah.
I got one the other day. We recently talked about your property at XYZ Street, whatever. Are you still interested in selling it? I was like, first we didn't. Second of all, no.
Right.
Right? It's getting shady.
It
Yeah.
is, yeah.
And so like for me, the other thing for me too, when you start out, like what marketing are you doing? We just had a huge move with our real estate team, 9 months ago. So I really haven't focused on acquiring anything. And the market's gotten more difficult to make things work anyway.
Right.
So it hadn't been my priority. As soon as we get things settled back down and I have more time again,
Mhm.
I'll start looking at, okay, how do I want to go about trying to acquire some?
Well, and anything else to add to that? Okay. So, Jay, one of the main reasons why I was so excited to get you in this conversation was because you have a great, successful property management company. And anytime someone's like, hey, there's a management, like, I need a management company, you and Mark 100% are always on there. And I'm just trying to like get like 1 or 2 of those, right? What is it? Why?
Yeah. So Mark's my brother. We own a property management business 50/50. And he, in addition to selling real estate, he operates that business. It started out as, so we had with our Keller Williams office, there was a property management shop that came in and pitched us on, we're going to take care of your clients and we're never going to steal them from you. And we're going to pay you a great referral fee. And it turned out to be a bunch of garbage, right? We found out they were not just would take our clients, but they were marketing to our clients.
Right.
And so we were like, all right, we got to stop that. That was our number 1. Number 2 is, as we start buying properties, we wanted to manage our own stuff.
Right.
So that's kind of what it was born out of. And Mark was doing some of that stuff in the mountains. So he was doing it was more like a second home management, estate management kind of stuff.
Right.
So he had a little bit of background in that. He wasn't doing payments and all the bookkeeping and all that kind of stuff. He was literally just arranging maintenance and that sort of.
Got it.
So yeah, we launched, when 2018, something like that.
About 4 years
Mhm.
ago.
I think we launched with like 20 or 25 doors.
That's actually a lot,
Yeah.
like
well,
just starting out, right?
How many
yeah,
were yours versus?
no. So at that point, 3 or 4 were ours.
Right.
Other agents in the office.
Yeah, so we went to the other agents in our office specifically, and we're like, look, the thing that they told you they would do, we will.
Right.
And because we're in the office, like we can say, like, this is our culture. You guys know us. We are not here to take your clients. And we've got a really successful real estate team. We don't need to take your clients.
Right.
So that's where it came from. And we went from, I mean, it just went double. And so we're at 280, 300 doors.
Wow.
Wow.
Profitable.
Yeah.
Yeah.
Well, let me back up.
Like it probably got profitable eventually.
It wasn't, so we went heavy investment in administrative staff and then a maintenance person.
Yeah.
And I'm subsidizing it for a few years because I'm paying Mark to run day to day.
Okay.
Kind of out of my pocket,
Mhm.
right? So it was profitable had I not been subsidizing it
Got
for
it.
a while.
Yep.
That said, we were growing fast and trying to not drive him crazy.
Right.
So I think we did it differently than most would do it.
Mhm.
And certainly if it was standalone, you wouldn't have done it.
Right.
And I think that's the challenge, right? We've had several agents come to us in the last few years going, I want to start a property management business. And we're like,
All
okay,
day.
hold on. First of all, you don't know what you don't know.
Right.
Second of all, if you're starting it, how many people do you have right now? And they're like, 3. I'm like, cool, that doesn't work. Right?
Right.
Unless you're doing it look by yourself.
Yeah.
And even then it's like,
Complete learning yourself.
understand it's a standalone company. You got insurances, you got payroll, you got.
Yeah.
They don't understand.
Right. Well, and that is kind of my point because every day I get a phone call. Hey, I want to start a property management company. I'm like, why?
Correct.
Why?
Why?
Just send me all
Like
your
we had a
people.
mission, right? We had a mission of, hey, number 1, I'm tired of losing clients.
Right.
Number 2, we know we're buying.
Yep.
And we looked at that, so we won't pay somebody else to do it. Correct. And number 3 is we can grow easily because we've got a relatively captive audience that'll send us business.
Mhm.
So like we don't spend money marketing. We don't we're not. You won't see our stuff.
It's just an add-on to the services. you already
It
provide.
really is like a value add off of our real estate.
What was the point that it became profitable? Was there a threshold of number of doors?
Well, again, I think it could have been profitable earlier had we built it differently.
Yeah.
But like Mark always wanted to get out of it. So it was we're going to invest heavy in like a strong director of operations, a strong property manager. And then we hired a maintenance person before that piece had paid for itself.
I think the metrics, depending on the area, right? Like we're in Charlotte, we know we're talking about Charlotte, but I think depending on the metrics, it usually is about 250 to 300 doors before it gets profitable, unless you're the driver.
So that's what I was gonna say, right? So like, if you figure average rent is 1,700 and you're charging 10%, just to use a number, right?
Yeah.
That's 170. So
Yeah, like
100 doors is $1,700 or $17,000 a month in top line revenue. But then you got payroll, insurances, all that. So like honestly, like if you're running it as a single person operator, you probably could do it at 50 or 60 doors.
Mhm.
But anything less than that, you're losing.
yeah, I can't bring on a full-time person. Like I'm literally doing 37 doors myself. And I'm like, I hate life. Like I'm literally like, someone else, please take this over. Right.
I didn't know you were doing it too.
Well, because I have 9 of my own, and then we have I'm looking at this like they're them. But, we have 13 every year investors that I'm like, hey, we'll do it for 9%. Everybody else is going to charge you between 10 and 12. I just want you to send us referrals.
Yeah.
And we rock compared to any other property manager. So
That's the other thing, is honestly, property managers and commercial agents. And I know I'm generalizing here, right? But property managers and commercial agents are way down the totem pole of customer service.
yeah,
So
like we're dealing with, so we're selling off a portfolio of rental properties that my client owns slowly because it's the total thorn in the side. It's with a property management company, a very big property management company in Charlotte, and they are terrible. And I'm like, give me all of them.
most of the big shops are pretty terrible at customer service.
Yeah.
Terrible.
Terrible.
Like Charles Barkley, terrible.
So same or similar question. Are you managing your properties? Okay,
Airbnbs, yes, but
Okay.
the rest of them, absolutely not.
great.
That, so God bless you guys.
Well, no,
so-
I listened. I told Mark when we started it, like, this is not what I'm doing.
Yeah,
So you're totally passive,
I mean,
except for the Airbnbs, which is like what, 4 hours a month?
well, and even that, I can't even claim that because my wife does it. So,
Okay, well,
but-
there you go. Totally passive.
Yeah, I mean, there's still, like, I do a lot of the construction management and a lot of, but I'm more hands-on.
Your project manager.
Yeah. Especially because previous ones, the one that I have on my 18 unit now is actually really good, which is great because they're 3.5 hours away and it's a problem.
Right.
And they've been the best property management company, but I'd be curious if it's the same company that you're talking about here in Charlotte that managed a handful of my portfolio.
If
And
it's not, it's one of about 10.
Yeah,
it
Like,
was-
it's funny
it's
because
awful.
like Mark has educated me, like, we're a big shop and I didn't realize
you're huge. You're
it.
huge.
Yeah, and I didn't realize it. I didn't realize there's only a handful that have more than 500 doors.
Yeah.
And there's only another handful that have between 250 and 500 doors. Like,
Yeah.
most of them are managing 50 or less, and it's usually a single operator.
Yeah.
Yeah.
Like, I didn't know.
Like I want to literally find a driver, find a jockey, and then just buy all the small guys up and
So we've started having some of those conversations. Most of them overvalue what they've got.
of course,
We've made a couple offers,
that's awesome. And I think we're gonna see.
and
a
we've
lot
been
of that.
offered a couple of times from some of the big shops, which is crazy too.
Love that.
That's awesome.
We're losing people. What do you wish you knew years ago, or 2018, 2015, that you would like to tell people not to make that mistake now?
I've got a couple of
Go
things.
ahead.
One I mentioned before, and it's you talked about bigger pockets and all of those different strategy, all the different ideas that come up there. And what you hear all the time is just the buy and hold forever, don't ever sell. Especially if it's a rental property, don't ever sell it ever. For me, that became and also along with that, the first strategy, infinite cash on cash return. Like cash on cash return is the #1 golden rule metric. That's all that matters. By all those accounts, my portfolio is like, I should never have the portfolio that I do because I would have kept the same assets previously. And so when I started looking at evaluating equity and understanding really truly the power of equity and also the worthlessness of equity, if you can't do anything with it, that's really like equity that you can't tap into is a vanity metric.
Yeah.
And so that equity can be gone in an instant. And so this all depends on people's risk tolerance. And I understand that some people aren't going to like it at all, but I would prefer if, I'm selling the duplex that I have, it's a Airbnb, it's making a lot of money. I'm selling it because I have a ton of equity. And even though I'm making $2,000 plus a month in cash flow, my return on equity is 1.2%, which is awful.
It is awful.
So I can turn around and sell that, and I'm not going to 1031 it either because I can use some other offset losses and stuff like that. But by doing that, and it's something that I actually 1031 into for the first deal that I did. And by doing that, it frees up capital to invest in other better assets, better opportunities that are going to generate more capital. And if I were to go the other route, if I were to refinance and I could pull all my cash out of it, I would drop my cash flow down to $500 a month. I'd leave 30% in that I couldn't touch. Right now I'm under contract to sell it for close to 700. So I'd leave $200,000 in the deal that I can't do anything with. I would rather sell that and use that, even if right now I don't have anything I'm putting into yet, but I would rather put all of that equity into a new deal that's going to cash flow better and have it stuck in that deal and be underwater in that deal than have $210,000 of equity and value just disappear like that. At least I've now transitioned it into a new asset that is going to make more money for me. And then I can use exactly what you talked about, and I can just hold through the downtime, but at least I'm holding a better asset than I'm holding right now. So that, when I started to realize that with the beginning of my portfolio, I felt really uncomfortable about selling the first couple of deals that I did because they were making money and I didn't have very much money into them. But when I started to realize that I can exponentially grow my wealth and my portfolio, and also by doing that, I can also exponentially grow my cash flow, it became a no-brainer. But that's very against a lot of traditional wisdom and guidance. So, and I've had a lot of people push back and say it's not at all the right thing to do. And that's also, understanding taxes and understanding having a good CPA and just overall understanding the financial game and how it all works is very critical to implementing a lot of those strategies too. So otherwise you get with big tax burden and all that kind of stuff. That's
Are you cost segregating your properties? Yeah. I mean, there you go.
Yeah.
That's why it makes sense.
Yeah.
Okay.
It's funny you say that, right? Because that's exactly what happened on my first one. I couldn't, it was cash flowing like $700 a month, but I couldn't pull any equity out.
Yeah.
Because it was a non-conforming condo.
Mhm.
And so the only person that could buy it was paying cash, which nobody's paying cash for a rental property. Like, I mean, they are, but you know what I'm saying?
Yeah.
Mhm.
Or their primary residence. And so, I couldn't pull, I couldn't refi. So I went to Brian. I was like, dude, I know I'm not supposed to sell this, but like, here's the situation. And he walked me through it. He's like, you gotta sell it.
Yeah.
And so I sold that one and 1031 that into, we had one of the properties we manage that didn't come to us through an agent, was getting a divorce. And Mark's like, hey, this is available. Here's what he wants for it. And I was like, done. So I was able to 1031 the first condo, doubled in value, right? I literally had $15,000 in this thing. Like I bought it for 75 grand. Sold it for 150. 1031 that 150 into 200,000. So I had to put like 60K into it. Turned around in 6 months, had it appraised and refinanced out of it, and got all my money back, and then some. And I'm still not paying taxes on it, right? And I'm sitting there,
Yeah.
like that was a massive aha.
Yeah.
How much flexibility real estate gives you that, putting money in the stock market, man. Like I was a kid, but I was around when Enron went to zero.
Right.
I don't know anybody that's got real estate that went to zero.
Right.
Yeah.
Well, and what a blessing 2000. I mean, terrible for so many people, but the blessing of 2020 was the interest rates and the cash out availability to be able to burn basically anything you wanted.
Yeah.
And even if it was like 1%.
And the jump in equity made it, you can refinance it.
Exactly. So maybe not during now that interest rates are, heavy high, but yeah, I love that. Okay.
I think one other note on that too, I think understanding depending on your strategy, and if you're trying to be more active, trying to be passive employee, and you do a deal and just make some cash flow, it's a different story. But understanding the hockey stick trajectory of deals, where if you can buy into it, you like deals that I had. So if I trace back the first one that I did, I put $40,000. It was $160,000 for that quad. So I put $40,000 into it. Ended up when I refied, I basically pulled out all the money that I put into renovation. So I still had 40 to do it. But I sold it for $400. So I took advantage of that initial hockey stick. Now at that point, I was making $800 a month in cash flow. But from that point on, I was only going to increase by like 3 to 5% a year. I mean, maybe in markets like this, maybe it'll be more, but that's all you're banking on is that market growth.
Right.
Same thing with the value. Now, that
Well, and you're in fringe markets too. Like you might see Charlotte jump, but those outer band
Yeah.
areas
Yeah.
don't jump the same way.
Right.
You
right,
can
yeah.
guarantee 4% appreciation on average for where you are.
Yeah. And then, but then if you can instead take that equity and jump into the next one, that you can
Mhm.
take advantage of that hockey stick again, and then before it goes to plateau, that's where, you know, my initial $40,000 has turned into this duplex, which is now without adding any more money to it. Could, if I had sold it, I've got a business that I could buy and 34 units of apartments that I could buy from it. And that's all just from that initial money, but that's by rolling and snowballing and taking advantage of understanding where you're at on that hockey stick and where, like, eventually it's going to plateau.
Right.
And may not plateau because it's still going to be, you know, it's going to rise with the market, but you can either, like, if you jump from property to property, and if you're active in it and you're smart about it, you can take advantage of this, avoid this, and then just keep doing that. And then eventually you just leave it, you know, I'm not going to do that forever.
Yeah.
But while you've got the time to do it, while you've got the intention and interest of doing it, take advantage of it right now.
It's a snowball effect.
Yeah.
When you do it that
Massively.
way.
Yeah.
Yeah.
Because also at the end of the day, 100, like, especially if you're working a job, what really does $100 a month do for you in cash flow? For a lot of people, not that much, versus you can sell that and you can turn that into 3 properties that make $100 each.
Well, I think, okay, so you said that, right? But a lot of people take that and just pocket the money.
Yes.
That's
sure.
that's the negative of selling things that go from value. Right?
Yeah.
If you're going to sell things that go from value and turn that equity into multiple properties, that's a different that's a different story.
Yeah, don't sell it back.
Right. Or anything else for that.
Yeah, anything, but yeah, absolutely. Good.
It's like you take the money out of quote unquote out of the business.
Yeah.
Do you guys have any questions, Zoomers, for these guys, or any deals that you need to figure out structure? If you're available, if so, just hop off mute and ask. So you've had some great questions. Any questions? Anybody else? Thanks for your time. I'm glad it's not raining anymore. That's the good news. All right. So if there's nothing else, those are all my questions. Is there anything that perhaps we didn't chat about that you want to share? No? You're
No, I
both
mean-
looking the same way.
No, I mean I think we have covered a lot.
Yeah.
Yeah, I
I think
agree.
there's always a million things bouncing through my head, so I'm sure there's
Well,
something
that
I
and
can talk
honestly,
about,
like
but
everybody can have a question that we wouldn't have an answer to. But
Right. And so it was streaming on Facebook, so people are going to watch this back. And then if they have questions directly, how do they get in touch with you?
the easiest way for me is my email, jay@jaywhitegroup.com.
Awesome. And then Patrick.
mine is Patrick at investdgp. Everybody always messes it up. Investdgp, David George Patrick.
Awesome. Awesome. Thanks for your time.
Thanks for having us.
Thank you.
You're welcome.
Nice
I'm
to meet
gonna
you.
Yeah.
bye everyone.